tensions in the Middle East aren't just driving up oil prices and shaking up the stock market. They're putting pressure on the Philippine insurance industry too. From investment jitters to shrinking household budgets, insurers warn that protection matters most when global crises strike. Jin Kim has that story.
It's not just banks and the stock market feeling the heat as tensions brew across the Middle East and other global flashpoints. Philippine insurers are bracing for potential claim surges and uncertainty in investment returns. PruLife UK warns that geopolitical shocks like the Israel-Iran conflict go beyond oil supply disruptions. They ripple through the financial system and hit insurers as well.
Of course, we're all concerned about the effects of geopolitical risks are always present in any business, including insurance companies. I mean, we are primarily a financial institution, and of course, any geopolitical instability will, of course, affect our ability to offer better products, to maintain our position in the market.
But of course, we're not immune to the secondary effects. I think primarily because of the market volatility, that would impact definitely investment portfolios, particularly for the life insurers.
Layer in inflation and the pressure mounts. Higher oil and food costs are eroding purchasing power and pushing operating expenses up. And when money gets tight, insurance is often the first thing cut from the household budget.
Yung insurance kasi, as we all know, parang last product in your mind na yan eh. So it's not normal, it's not a product that you'll normally think of buying immediately. No? Walang ganong pull.
But insurers say that's exactly when protection is most needed. During a crisis, whether it's a medical emergency, a disaster, or a job loss, insurance is meant to be the first line of defense. Yet the numbers tell a different story. Most Filipinos remain underinsured. With penetration still below 2%, the Philippines trails far behind regional benchmarks, a gap insurers are determined to close.
We do see that people will require more protection. We believe people will need more protection products and ordinary life products, health insurance.
Insurance companies are working to change the mindset.
Ang kulang sa Filipino community is insurance. Even if you say na ang affected dyan yung mga investments nila in equities, debts, kung nawala lahat ng investments niya, wala siyang pagkukuha ng funds. And that's where insurance comes in.
And to stay resilient, companies are reinforcing their capital positions and redesigning strategies to weather global shocks.
We have strong capital positions, so we've been maintaining consistently yung capital well above what the regulators require, so that ensures resilient tayo even under such stress scenarios. Thus, in terms of our investment strategy, we design it in a way na ma-mitigate yung mga concentration risk, so may diversification built in. Especially, there should be enough cushion against mga global market swings.
They're also ramping up enterprise risk management, tracking volatile scenarios in real time, and stress testing against escalations.
For in life, we monitor and respond to emerging risks in real time. In fact, we're now scheduling an emerging risk assessment workshop, so to update our emerging risk radar. And geopolitical tension is definitely a key focus area.
Insular Life notes a likely rise in demand for income replacement products, particularly for OFWs who may be exposed to economic shocks abroad. Jin Kim, Billionaire News Channel.